Investors and traders, welcome to the channel Market Chart Pattern. Today is 24th of October 2023, and I hope everyone is having a great day. In this video segment, we are going to take a look at the key US stock indices. But before we take a look at the stock indices, we would like to take a look at the bond markets through the bond futures. This video is for educational purposes only, and it is not a financial advice. So let's go and take a look at the US Treasury bond futures. This is the 30-year bond futures chart. The reason we want to take a look at, or we usually start by taking a look at the bond markets, is because the bond markets are much bigger than the US stock market, and it is all a flowchart of money. So money is moving in to something, an asset class, it's moving out of an asset class. And what happens in the bond market, which is actually a lot more sensitive to interest rate movements. And some people even say as far as that the bond market is actually the more clever market. I believe it's just because another way of saying that the market is able to anticipate the interest rate moves way in advance, just because the exposure it has towards the interest rates. And in fact, the bond prices and the yields are inversely related to each other. So what we are looking at is the daily chart of the T-bond futures, and this is the 30-year Treasury bond futures. It's also known as the long bond future because of its duration, which is 30 years. Something important has taken place, really important. Over the course of last 2 days, especially this Monday, this market was very strong, and there is a strong possibility that in fact this market might have actually turned. It's a little bit too early in the sense that we don't have a confirmation from a technical perspective, but one of the key things that we were watching for, which I'll show you on the weekly chart, and also what we have seen is on the daily chart, that it was 107 level, which was right at the 1.618 Fibonacci expansion of this entire range. So this pretty much in this entire range, let me try to draw it for you like this. Here we go. If we just take an expansion of it, what we get is the 1.618 around 107, and this is where this market actually went and saw a strong support or buying come in. Let's actually move to the weekly chart. Here we go. One of the other things that we were watching for was this level around 110, and that was basically the 78.6% Fibonacci retracement. So we were actually thinking initially, based on some level of support that we have seen in the market, that maybe it was this level where the market might actually find at least enough support there that it could rally for a few months. But the momentum, as you can see, is really bearish, especially on the weekly chart. So what we have seen is actually market move a little bit lower and right to 107. So this is what we are watching. If the bond markets begin to rally, this because the prices are inversely related. So price of the treasury bond futures increase, the yields go down, is an implication that perhaps the interest rates might be moving lower as well. Of course, that remains to be seen, but this is what the bond market will be telling us. Let's take a look at the US Treasury. This is the 10-year T-note futures. This market is even bigger than the 30-year bond futures, and what we see is a similar kind of a pattern, in the sense that there has been a rally over the course of last 2-3 days. Excuse me, the trading days. And one of the key things that we're watching for is initially this market could rally to about 108, 108.05, and if it begins to move higher than this level, then that will be an indication that maybe this rally might have legs, and maybe the market might have even in fact turned. So this is what we are looking at in the bond futures markets. Now, coming back to the US stock indices. So this is the daily chart of the S&P 500 index. And this is one of the charts that we have been looking for quite a while. We were initially really interested in this ABCD pattern formation, right? This 78.6% Fibonacci retracement. In this video, I'm not going to go through the patterns that's been covered in previous videos. Maybe on a longer weekend video, I might actually cover those again. One of the key levels that we were watching for was 141.82, and on Monday we came the low was 41.8922, based on the data that we see on TradingView. So it came pretty close. I think we just missed it about roughly about 7 points, and in fact the market just came into that zone that we were watching for. And the other thing is that it also formed a lower low compared to the low over here. And over the course of last two trading days, we have seen the market kind of hold this level, although the volume maybe might be a little bit thin for now. And given the fact that what is going around geopolitically, the market holding this level, it's pretty significant. So really key thing to be watching for this one. Just a quick look on the weekly chart. So this is the weekly one. And here again it's close to the levels that we were watching for from a momentum perspective. The price is above the 20 week moving average, although, excuse me, 200 week moving average, in which is in gray line. The price is below the 20 week moving average, but it might be just going through some consolidation phase. So we'll just keep on looking and watching it on a daily chart for further confirmation. So look, this is the rising 200 moving average, and price is just around there. Let's take a look at the NQs. Just going back to the S&P 500. This is the cash market that we take a look at. Going below this 41.82 on a consecutive daily closing basis would be pretty negative for the market. But for now, we are maintaining that as long as this level 41.82 is held, the chances are that the market actually begin to move higher as we begin to move into the month of November, especially towards the middle of the month of November. Let's take a look at the NQs. This is the Nasdaq 100. Here the pattern formation again in black ABCD, extended ABCD formation, close to 78.6% Fibonacci retracement. It was pretty strong resistance level, and the market over the course of last few months has just gone nowhere but sideways and rotating lower. One of the key levels that we are watching for is about 14,300, roughly speaking, and that's a really key number for us. And then below that, 38.2% Fibonacci retracement around 14,050, and of course there is a rising 200-day moving average. So in this buffer zone, if the market begins to close below these levels on a consecutive closing basis, then that would be pretty negative. But what we are watching for is the price action. Market could pull back to around 14,300, maybe a little bit lower, but it's just ranging in a sideways range. And as we begin to move into the weeks in November, towards the middle to the end of the November, we are likely to see positive seasonal momentum come into the market. And given the fact, again, just reiterating the geopolitical impacts, the market is holding pretty well. Let's take a look at the Russell 2000. So this is the small caps. The small caps, let's actually take a look at this on the weekly chart. So this market, of course, just looking at this, has been impacted a lot. It is much weaker compared to the S&P 500, the cash market that we took a look at, and the NQ100, Nasdaq 100 futures. But it's also just ranging. It's just been in a really long range, and ranges do break out eventually. In which direction it is going to break, we have to wait and see. But for now, what we see is that it just forms a double bottom and a double top, and then it's just coming and actually challenging the bottom of the range again. So this is what we are watching in the key US stock indices, and I hope you found this video of educational value, and if you did, then please do like the video. And if you like how we do the technical analysis based on pattern recognition, Fibonacci ratios, retracements, projections, extensions, expansions, then please do subscribe to the channel and also hit that bell icon button. That way you'll know when the new videos are posted. So thank you very much for watching. Good luck and good trading.